Good morning and good afternoon, everyone. This is Andrew Campbell from Avery Commodities SA. I'm here to give a briefing about the sunflower seed markets around the world. First, a very short introduction about myself and about the company. As I said, I'm Andrew Campbell. I'm vegetable oil trader in Avery. I've been a commodity trader for already 12 years. Spent most of my time trading vegetable oils, prior focusing on soybean oil, and at the moment focusing more on sunflower seed oil. I work for Avery. Avery is a commodity trading company that belongs to Campbell. Campbell being one of the largest farming groups in the world, and currently the largest sunseed crusher in the world as well, which pretty much by default puts us as the largest exporter of sunflower oil across the globe. So without any further delays, I would like to give a briefing on the sunflower oil market. Well, to start with, let's start with production. Currently, the harvest in Ukraine and Russia is advancing. We're between 20-25% harvested at the moment of this speech. Crops are looking okay. Yield-wise, we're not having record yields, but given the very large area that has been allocated to sunflower seeds, we are ending up with very good production across the globe. So we see production increase everywhere, from Ukraine, Russia, Moldova, Europe, Turkey, etc. So year over year, we're talking about an increase of over 6.5 million tons of seeds, which is a lot. I don't recall seeing such an increase in any other year over year. On the breakdown, we see that Ukraine will finish the crop between 17 and 17.2 million tons of seeds, while in Russia we have a production between 15.4 and 15.7 million tons. Once again, 6.5 million tons more of sunflower seeds. This is coming at a relatively high flat price environment. The current flat price environment, of course, is caused by several different factors. We see overall veg oil prices high, and we have an inflationary situation across the globe, which of course is keeping food prices inflated. And so we should not isolate the flat price on sunflower oil and simply assume that because the crop is bigger, or crops are bigger, we should see lower flat price, because we're living on a much bigger picture in terms of inflation and food prices. Having said that, the current high flat price gives the farmer a quite interesting return over the investment on the farmed land. We assume their return over investment on the over farm land is above 150%, so quite good, almost a Bitcoin type of return. So we do expect the farmer to be a relatively happy seller of sun seeds as the harvest advances. As I said, we're between 20 and 25% harvested. So very soon we should be seeing the farmer coming and giving the seeds to the crushers. At the moment, the farmer selling is slow compared to previous years, which basically means that the farmer will have more to give in the next coming weeks when we compare to previous years, of course. So we should expect a very high volume of seeds coming to the market in the next coming weeks. Okay, enough said about supply. I would like to talk a little bit about the demand side of things. We assume demand growth in India for the new crop, our crop starting in October, ending in September. So October 21 to September 22. We talk about a growth of around 4.5% in total veg oil demand. And with this, we assume that monthly imports into India of sunflower oil will be around 220,000 tons per month. So on average, that's a growth. Sun oil is definitely more competitive than last season when we had a crop failure. So we should expect this kind of volume going on to India. Regarding China, one of the biggest consumers as well, we do have a relatively high stocks in China at the moment. They're still digesting old crop stocks. So we assume between 350,000 to 400,000 tons of sunflower oil sitting in Chinese stocks. And with that, the Chinese consumers have not been very present in the sunflower oil market recently. So we assume they still have to digest a lot of stocks. As per I last checked, probably last week, there was a disparity still of $100 if you would like to sell into China, meaning that if a Chinese consumer would simply buy CNF from a trader and sell it in domestic market, there will be a loss back to back of $100, so a counter margin, obviously. So we're seeing growth in demand in India, and we're seeing some growth in China to a certain extent. But a big question mark is how long the current stocks would take to be digested. So that's for everyone to make an assumption of it. We think that Chinese demand year over year is slightly up, maybe 150,000 tons up on the year. This is the sunflower oil context, and then of course we cannot look at the sunflower oil isolatedly, because we know there is a high correlation with a substitute oil such as soybean oil. Regarding soybean oil, what we see is quite a good movement of soybean oil from Argentina, or soybean oil methyl ester, pardon me, from Argentina to Europe. So the quota for the 2021 has been fulfilled to the max, and Europe has already booked at the moment of this speech 5 cargoes of Q1 into Europe of SME. So of course that keeps the whole basis scenario in South America to a certain extent supported, but then we should not forget that we do have a soybean oil already relatively expensive to palm. So food-wise, soybean oil demand is not maxing its exports at the moment. So we do believe that in general, soybean oil as per se should be relatively balanced in terms of biodiesel and food demand. Biodiesel into exports, of course. It's also important to remember that Brazil is not running the full biodiesel mandate. Brazil has a B13 mandate, which means that 13% of all the diesel consumed in the country should be considered of biodiesel, and the government has been running this between B10 and B11. I think given the high flat price environment, it's fair to say that B10 until the new crop comes is rather a very good assumption. Similarly in Argentina, the government is running well below what it was supposed to be running at this stage for biodiesel. Both countries, of course, have been a victim of inflation and high flat prices for vegetable oils. So it does make sense for governments to simply put down mandates. Well, with this in mind, what I would like to share with all spectators is that the crops are good in sunflower oil, sunflower seeds. Crops are good. There is a relationship with bean oil in which sun oil is relatively cheap. It's not cheap enough to max out demand as per se. So it is very possible that in the short term, we shall see a decrease in relative prices of sunflower oil compared to other oils, given the fact that the farmer is undersold, the farmer has very good returns, and the crops are looking good. So overall, we should expect relative values to decrease. Of course, we don't make a flat price call here because there are a lot of macro-environmental factors that influence our market. So when we talk a flat price from one oil or not is always on relative basis. So keep that in mind. Sunflower, relatively speaking, should be losing some value. We should see a correction in the short term until the farmer gets it out of the ground, and from there onwards, as we evolve towards the Q2 of next year, then we should see sunflower oil prices recovering, because the first 2 quarters of the calendar year, or the crop year, pardon me, so OND and JFM, soy should decrease in price, should gain demand, and once this is done, the very back end should go back and to relatively healthy values against other oils. That's it from my side. I hope I was useful. If there is any questions or any comments that you'd like to make, please don't hesitate contacting me. My email address a.campbell@avericom.com, and we stay in touch. Thank you very much. Have a good day, everyone. Bye bye.